All right. Well, Paul, thanks for coming and doing this.
Sure, John. Happy to be here.
Yeah, we're in this beautiful space where so many great startup things happen, and I'm excited. A little bit later in this discussion, we'll touch kind of more on this space and this neighborhood. But Scale Omaha being about how, business leaders and, people who have been successful building things in Omaha and in Nebraska, kind of telling the story about how that happened. So to kick it off, what is Tenaska's business? And what is the main kind of theory behind the business, and how to, it's not totally well known. And so what's interesting about Tenaska, it's like one of the most successful companies that we have here that's maybe the esoteric energy business, but people don't know. So let's start with just what is Tenaska?
So the question is, what is Tenaska? Of course, the name means pretty much nothing, so it's not actually a thing. But it's a group of us. We're all working for a company that you'd recognize. We all work for a company called Enron. And Enron was the company that was put together from the Inner North companies of Omaha and the Houston natural gas companies, which included multiple other companies as well down in Houston. That merger happened in '85, and some of us decided we didn't really love what was going on. And a group of us, about 8, eventually came together and formed our own energy company and headquartered it here in Omaha. That's a pretty crazy thing to do, because if you know about the energy business, what you know is that it is very capital intensive. So we had 8 people who were energetic and everything, but didn't really have any money. So, of course, we started a capital-intensive business. So Tenaska's initial line of business was the most capital-intensive part, and that was to build power plants. And we saw an opportunity that existed in the market because of evolving technology. And that evolving technology was that natural gas-fired, high-efficiency, large-scale gas turbines were just evolving as a reliable technology. And when we looked at that, we realized we could produce power much more efficiently and much more cheaply than the utilities who are operating all the large coal-fired power plants. So that was an important thing. We had a large market which we could go after. And it seemed, in part because of the structure of the industry, utilities are kind of hidebound and not ready to change quickly. It seemed like there weren't a lot of people who saw it the way we saw it. So when that happens, one of 2 things could be true, at least one of 2. One thing is you've got a dramatic and keen insight that's going to yield tremendous advantages. Or you could be wrong. We were hard-headed enough to believe we were right, so we started developing the business. And if you want to build a power plant and you've got no money, what you do is you negotiate every deal that is wrapped around that. The building contracts, the equipment contracts, maintenance contracts, sales of powers, purchases of natural gas. You negotiate everything, and then you go get the money. And when you do that, and what Tenaska was able to do was line up pro forma financing and then go out to privately place equity for those projects. Our first project was about $250 million. We were able to do everything that I described and then get all of the equity by selling about 40% of the ownership. And that was step one. We kind of said there might be a few more of these. Since that time, we built, for that type of technology, we've built well in excess of $20 billion worth of power plants. And in order to do that, we ultimately had to bring in third-party equity for about a third of the ownership. So we ended up owning billions of dollars worth of power assets with very little equity. Along the way, we added a variety of other businesses and expanded throughout North America and to a couple international locations. So Tenaska's other businesses it's in the gas and power trading business. And everyone who knows about trading thinks that the model for trading is you have large speculative positions. You are trading in a commodity, the trades can go against you, you can lose money, what have you. We didn't really have enough money to be in that game. So we built supply chain management businesses, that's what we call them today, for natural gas and electricity. And those businesses take approximately zero commodity risk. And they trade in some of the largest commodity markets in North America. And Tenaska is now the largest wholesaler of natural gas and one of the largest wholesalers of power. And we take zero commodity risk in those businesses. Tenaska also expanded into renewable sources of power and have built a very large number of solar and wind projects, probably more solar than wind. And those we've done in partnership with other companies that are keen to own those. So as we sit here today, Tenaska is still a private employee-owned company. It is ranked by Forbes in the top 20 private companies in the United States. That is, we've been in business since '88. So it's been a heck of a ride. As we sit here today, we probably have about 900 employees in that business. And we have revenues in excess of $20 billion. So it's become a very big business. So I'll pause for a second. I'm sure there are questions about that.
I mean, maybe like one or two, I don't know. So just kind of going back to the beginning, when Tenaska started, you leveraged into the business because you didn't have capital, but you're building power plants, liquid natural gas changed the game, there's a market advantage. Now, was it the operational expertise that you all had built around the energy industry that allowed you to, or was it purely you put together the deal in such a way that you negotiated all the details, so that alone was what was able to kind of lever you into the transaction?
Yeah, I guess I listen to that question and I say, what is it that you led with? What was it that made you different? And I'd say in a way there were a lot of things that made us different, but one of the great and brilliant things that Howard Hawks did when he was trying to talk the partnership into being was Howard Hawks, who you probably all heard the name, was the longtime CEO and chairman of Tenaska, and he's since passed away, sadly, last year. But Howard hired 7 people to come partner with him who were all different, who all brought different skills. Some brought engineering talent and were foremost in their field. Some brought commercial deal-making savvy. Some people came out of the gas business. Some people came out of the financial structuring business. So all of these complementary high-skilled people were brought together to put this company, to stand this company up and to execute the plan. And it was necessary to have those skills. When you boil those all together, what you're really dealing with is risk management. Risk management has a lot of different attributes, and it's not just what kind of insurance program you have. It has to do with how tightly engineered you are, how competent your deal makers are, how you wall off legal risks with appropriate legal counsel, how you think about credit risk and who you do business with. So all those skills were really inherent in the first group. But another thing that was done, and that I think was a competitive advantage, might be a very kind of Midwestern or Omaha kind of thing, is we argued about everything. We argued the conflict of ideas to get to the best idea was something that we really honored. So, we would get in a room and argue. And once we decided, then the argument was over, no more of that discussion, and it was about execution. And that's what we did. And so we got very focused on doing what we were doing to the exclusion of other things. The arguments were all had out in the open, and nobody got to full rank. So Howard's ideas were just as good as my ideas or Tom's ideas or whomever else was arguing. And many times, even though Howard was CEO and chairman, if there was a better idea, he would just say, yep, that's a better idea, let's do that. So I think these all apply to all businesses, these ideas. Get the best people, commit them to the best outcome, argue about how to achieve that, and use your resources as judiciously and carefully as you can. We used to say, see, I could just go on talking about this stuff forever. I know it's embarrassing, but we used to say, everything that you can know reasonably, you should know. And it always blew my mind when I'd go negotiate commercial deals with people, and they didn't know everything that they should know. And I knew everything I could know, and that gave me an advantage, bluntly, and, shame on them.
So the international business, I know you're very involved in Tenaska's international efforts and such. I mean, I would think so Europe, with liquid natural gas being a big part of the business, I would think that would be a big part of kind of the intelligence you would need to be in that market around the world. I know you've done a lot in Canada. Is the international piece of it, that's a mix of trading, understanding the dynamics between generation and transport, is that really about having great information? To your point, is it really about knowing everything that you reasonably could know? Or is there something else?
So my hearing has been kind of bad. I lost part of my hearing in a ski wreck a couple of years ago. But I think you asked about our international activities and how that dovetails.
Yeah, and with liquid natural gas, is being in Europe important in that market because the pipelines for the international market, is having information globally truly important to be competitive in that liquid natural gas, the energy space, in the way that you were?
The natural gas market was primarily a North American market until fairly recently, where there are very large exports of natural gas coming out of North America now, which constitute approximately 15% of all the natural gas produced in North America. So that's a lot. It has a big impact. When we did have international connections, though. So, for example, when we started Tenaska, the most aggressive banking in the world were Canadian and European banks. Later, the Japanese moved in, so we were always sourcing from the most cost-effective place, whether that was debt capital, equity capital, equipment, what have you. So, for example, one of my projects was I ran the international group. After I founded our Canadian business group, I then took over and we had an international group, which we don't do anymore. That's a different story. But I built a major power plant in Pakistan. And in doing that, it's got a lot of different kind of stories around it, as you can imagine. But we did a worldwide sourcing of every aspect. So part of the engineering was outsourced to China, part of it was in Europe, and part was in the United States. The equipment was partially American, partially English, partially Chinese. The labor was a mixture of Pakistani, Chinese, and English. We ran the plant using an Irish operating company. We financed the senior debt in the London market. We financed the multilateral debt in the DC market. The partnership was composed of companies from all over the world. So, you kind of have to take an expansive view of how to design your business so that it is the most cost effective. It is also kind of an interesting, I don't know, it was a very successful project, but, and we've sold it, we don't own it anymore, but, it was an interesting problem because in Pakistan, if you're going to do something like build the largest single point US investment in the country, which that power plant was, you deal with Benazir Bhutto, or Nawaz Sharif, or Pervez Khan, you deal with the prime minister. And so, when we had a problem, I might go have dinner with Benazir Bhutto and talk about it. And I was involved in designing how they would procure these foreign direct investments, working directly with the prime minister. And, I'm a kid just from nowhere, like from Omaha. So, it was.
You made the world smaller.
Pardon me?
You made the world smaller. Small world, like the Pakistani government's working with this company in Nebraska to source things from all around the world to build a power plant. It's making it a small world.
Yeah.
So you started out, like you mentioned, you organized private capital originally to put these deals together. I'm curious about Tenaska Capital Management, which obviously you led up. Like, what was the strategy there? Because it was kind of taking private capital like a whole different direction in terms of you raising separate funds and making investments kind of across the landscape in energy. What was the kind of strategic piece of that? Like how you guys started that?
So in the late 90s. In the late 90s, there was a real retrenchment of the energy space and the electric power space. And what that meant, and we've all seen business cycles, you've seen them with housing or apartments or any business that you're close to. What became true was it became true that you could buy power plants cheaper than you could build them. And that condition looked like it would persist for, an indefinite but long period of time. So imagine Tenaska is there, very successful at building things, but not a public company. Did not have access to a giant balance sheet like some big utility. So what we did was we said, how would we mobilize large pools of capital, equity capital, to be mobilized into this market for opportunistic deal making? And so I started an affiliate called Tenaska Capital Management, which was in many ways a standard private equity fund. It was a plain Jane 2% management fee, 20% carry, European model private equity fund. And we raised Fund 1 and shut the book down at about $850 million and deployed that, and it worked nicely. And then we raised Fund 2 and closed the books on that at $2.4 billion, and ultimately had about $5.5-ish billion of assets under management. As an example, Tenaska Capital Management controlled 25% of all the generation capacity in metropolitan New York City at one point. So it was a very large operation. I didn't love private equity, that it's so artificial. You raise this money, you want to shove the money out the door, your fund life is 10 years with 2 one-year extensions. You then have to exit all these investments, some of which you really like, right? Because you've got to liquidate that fund. So as we did this in parallel to Tenaska Energy Inc., the mothership, we were also growing Tenaska Energy Inc.'s balance sheet dramatically. And we just got to a point where we said, we really don't need to continue doing this private equity game. It's got all this SEC overhead and everything else. We're not going to keep doing it. We're going to just grow our balance sheet enough that we can do what we want. So, I think that was a really interesting chapter. And a lot of people live their whole life in private equity, but I was probably there for about 10 years.
You escaped. You got out unscathed. No, so that's interesting. So from the Tenaska perspective, when you're thinking about acquiring these assets, do you look at them purely as like a financially driven purpose, or do you have a real strategy around capability and expertise that you can uniquely bring to that asset to drive more value than maybe other market participants?
Yeah, I don't think that Tenaska does, I'll say, anything for pure financial only reasons. We're analyzing across all aspects of the market. The market has anomalies in it kind of naturally that we see because, for example, with our power marketing business, we are trading power every minute of every day, everywhere in North America. We have more information than almost anybody in the business as we sit here today. We're trading, we do something like 10,000 natural gas transactions every day. So we know how everything works. We know all the plumbing. And so when we see a power asset that is available, we have a view of what its value is that is uniquely informed. And so, if it's right and it fits for us, we can buy it. We may change it, but we'll buy it, and with the plan being a permanent hold. We are not a buy and flip type company.
Yeah. So before we move on to all these other, the real estate, I want to talk about art, some of these other things. I do have one more question about energy, just because as everybody can tell, Paul has forgotten more about energy than anybody I ever met knows. So AI has really changed the demand profile, especially on a go-forward basis for the grid. The latest kind of frontier models from OpenAI, from Anthropic, the energy cost on training is, upwards of above 100 megawatts, so as high as 300 megawatts. The scaling laws would indicate that somebody at some point is going to need to build a gigawatt something. What do you think about that? What do you think about the capabilities of like just the energy grid, just generally what it takes to build more capacity, the relationship between generation and transmission, and also kind of like who owns what? What do you think is going to happen with sort of the new demand profile of power?
Everybody here has a bad memory, I think, so you'll never remember what I said in 5 years. I can pretty much say it.
Tell the future.
Uh-oh, there's video. No, there are people who are projecting that the amount of capacity in North America will need to, and by that I really mean the United States and Canada, will need to double by the year 2040. There are people who are making those kinds of projections. What we're seeing with AI engines is that they are becoming somewhat more efficient from an energy perspective over time. We think that arc will continue, but there is a reasonable case to be made for a 50% increase in generating capacity. Generating capacity and supporting something like there are different kinds of servers. I'm not an expert. You guys are more expert than me, but certain of them require nearly perfect power, 5.9 type reliability power. For those, they are lining up backup generators for their entire load at the facility, connecting to the grid, and then running grid power into those facilities. They may do a wash transaction, so Google comes to somebody like Tenaska and says, I want to buy 1,000 megawatts worth of power. You can stuff it in the grid anywhere on the Eastern Interconnect, and we'll take a like amount out of the grid in near Washington, D.C. or whatever. So there are all sorts of different manifestations of what this is driving. But what it is, I think, going to require is a policy paradigm shift in the nature of the transmission grid for electricity. It's going to require significant new investments around all forms of generation. So when I say all forms, I mean renewables, but I also mean things like natural gas power. And if we're going to do that and deal with, we as a country now, and deal with the CO2 emissions from, 400,000 megawatts of new power, for example, then we're going to have to capture and sequester that CO2 effluent. And those technologies exist today. They're expensive, but because of, for example, Tenaska's belief in the growth of this sector, we are pioneering a business in carbon capture and sequestration now. And we expect that to be a very long game, but that is going to be part of the solution, as well as more renewables, as well as probably technologies that everybody thinks are too far off in the future, like new technology, nuclear, and that sort of thing.
Yeah, that's just something to think about a lot. When, like, again, when you think about these AI models, if GPT-5 is going to take 300 megawatts, what does that mean for GPT-6 and 7? And you start to get to a place where it doesn't work. And correct me if I'm wrong, but the grid in the United States, don't we have really like 3 grids, and like 2 of them are alternating current, one of them's direct current, and they...
Well, no, not exactly. There are 3 grids. There's the Eastern Interconnect, which kind of runs to the Rocky Mountains about. There's the Western systems, which are all interconnected, includes California, and runs up to the Eastern Interconnect. And then there's Texas. They're all by themselves for the most part. These are interconnected one to the other those are all alternating current grids, and then they are interconnected weakly, and I mean that weakly, with some direct current interconnects.
Gotcha.
That was scintillating, I'm sure.
Yeah, we had to get some of the nerd stuff out of the way here, everyone. So kind of pivoting a little bit, it's tough where to start, because I think that there's an interesting conversation to be had about kind of your view on the opportunity here in Omaha. And you've invested a lot here individually. You've traveled the world and done a lot of stuff. I think you probably could have gone and built things in a number of other places, but significant real estate developments. And I think like the place I want to start is, we've talked about this before, kind of your theory of place and innovation, and the role that kind of creativity and food and startups and kind of like energy, what that brings to a physical space. And we can kind of like get into some of the different projects that you've been involved in from a real estate perspective.
Sure. I'll kind of wander around the way that I do on an answer like this, but so around 2014-15, I kind of decided that for me, I was probably not going to continue to build new businesses. At Tenaska, I was one of the people who built business after business after business, and being a serial business builder is great and interesting in a way, but it's a lot. And so I became non-exec. I retired my role as vice chairman and group CEO and became a board member and had strategic oversight for the board there. So I'm still very involved with Tenaska, but I'm non-executive. And when I looked at things that I could do is, I think in systems a lot. And so if you think about how you change a community, it's by altering the systems in the community. And one of the things that we started to study, because we weren't really good at being retired, we started to study what it looked like what successful communities had. How did they work? What was it that made some communities successful and more vibrant than others? What do they have? And what we saw is almost all jobs are started by small companies, or big companies don't really generate that many jobs. I mean, it's great to have big companies in your community, and we certainly have some great ones in Omaha. But employment numbers and job creation is all about startups and smaller companies. That's really, really important. But there's another thing about it that is also very important, and that is that communities are changed dramatically by the amount of wealth that is created in a community. And wealth is created by people who start businesses. So that has been a distinguishing feature of Omaha. And if you look at the Omaha of today, it is dramatically shaped by companies that created a lot of wealth. There's Berkshire Hathaway, there's the Keywood companies, there's Tenaska, just to name a few. There's flywheels and workshops and all these companies that are involved here. And so when you understand that that is the fact, that you change communities through wealth creation and that you create wealth through building businesses, and that's the whole thing of startups, you say, okay, who's good at that? How do they do it? And so we looked at Indianapolis and Austin, of course, which everybody says is the thing, and all these other cities, probably about 15 other cities. We traveled to them and we tried to understand how they worked. And they had some things in common. They had a geographic center of activity. They had a community that invests in startups. That community didn't have to all be there, but the startup community had to draw attention from investors. And then they had a community around startup that was conducive to startup, understood the risks and those sorts of things. So here in Omaha, we had, but you do need critical mass, size matters. So here in Omaha, we had some great businesses. We have a lot of wealth that doesn't know how to invest in startups, but we did have a lot of wealth, and we had a well-educated, very hardworking population. One thing I learned at Tenaska is when I started there, I was a little nervous about it. But we went to New York and we could go toe-to-toe with anybody. I went to London, we could go toe-to-toe with anybody. It turns out we got great people here, and it's a huge asset. They're hardworking, they're honest, they make great team members, which is one of the qualities of importance. And so you've got part of the building blocks for your startup community were here. They just weren't organized. So in 2016, we started looking for a place to go. And one place we were looking at was this neighborhood. And by 2018, we had made the deals. We means a group of investors that Annette and I assembled, made the deals to acquire the initial holdings here, which is about 45 plus acres. The building that we are in now, the Mastercraft building, and the derelict building to the south of us that is going to be the coolest hotel in Omaha in about 2 years. But we went ahead and made the decision to pull the trigger on buying all of that and starting this project. And I'm not technically a real estate developer, but I am a commercial person who's very versed in structured finance, risk management, and commercial deal making. So really just assembled the whole thing and then went to work on it. We had this thing called COVID that happened. I barely remember.
Never heard of it.
Yeah, it didn't exist. It didn't exist. It was a hoax. So, that kind of threw a monkey wrench into the plans. But I think, one of the great qualities of the team I assembled is they're very stubborn and they just keep going. And so we just kept going. And so now we own we own the controlling interest in the Capital District. There's some other investors. We own this property with a group of investors. We own multiple apartment buildings and things here in this neighborhood and elsewhere in Omaha. And we've recently having learned a lot about the hotel business, bringing the Capital District Marriott through the COVID situation, we decided that we liked a lot of things about that business. So we've recently created a platform business in hospitality, so hotels, and we own the Marriott. We own a hotel in Minneapolis. We're in closing mode on a third hotel, and we've done all the development work, and we'll soon start construction on the hotel next door, and we're going to buy some other hotels too.
Well, I know, the background in deal making and getting the debt finance and all that, but I mean, there's very clearly like a vision for this, an aesthetic vision, a very practical vision. There's the business vision, but I like when I've talked to you about this, like just the art on the walls, everything fits. We were talking a little bit before this about your educational background, mechanical engineering, but you took a lot of different classes. I mean, how much does some of that, I mean, you have like an eye for kind of design and making a space be conducive. What role does that play at this point kind of in your career doing these real estate developments and building out things like this?
So if you want to bring a bunch of creative people together, you're going to find out that they really like great beer, so we got the best beer. They really like coffee, so we got the best coffee with Archetype. They like ice cream, so we got the best ice cream with cone flour. And they really like pizza, so okay, Dolomiti. I mean, it sounds a little bit crazy, but our startup community can hang out anywhere they want, right? So we want them to hang out here. And it's nice to have the ice cream and the pizza and everything. Yeah. But it's also, these are people who have very active minds. They're very smart people. They want to be around people who are smart and creative. If there's an artist or art, they're engaging with it. If there are, people who are doing fascinating things in nonprofits, they're comparing notes. And so what we're doing is building community. And I joke that an old frosty joke is I say we're building a religion, really. It's kind of like a system of beliefs. We're here together, we're creating stuff, and we can do it. And if you have a bad day and you're thinking, I'm never going to solve this problem, and you run into somebody who is solving problems and you talk with them, you walk back the next day and say, I've got an idea, I'm going back into it. So that's, no great communities are not about isolation. They're not about a monoculture. They're about a community. And that sounds pretty obvious, and that's what we're doing. And I've always believed that art is an important part of life. It's important. Performing arts, visual arts, the whole array of artistic endeavor is, a fascinating exercise in creativity. And while people might think it doesn't go with creating a business or building a business, I would just differ with them. I've always thought it was important.
I agree. At what point in your life did you start to really appreciate the arts? Was it kind of always? Did you always enjoy the arts?
Yeah, so when did I appreciate the arts? I grew up in a house where, this is going to sound weird, but there used to be an oil company called Texaco. Some people are older and they remember it. You young guys just trust us. So anyway, when we would be in our yard breaking the leaves in the autumn, there's a thing that some people have heard of, it's called Husker football, right? That's it's a sport. So some people would have Lyle Bremser on the radio, and they'd be out breaking leaves and listening to the ball game. Our family listened to the Texaco Opera Hour And I thought that was pretty terrible when I was a kid, but I kind of like opera now. And, I went to the Joslin when I was a kid. It was pretty cool. I mean, once you started to engage with the artwork, try to understand what was being communicated by that, French painter in 1850 was actually telling you a story with that painting, right? And once you started to engage around that, you thought, wow, that's really a fascinating story about the ideas of the French Republic at that time. It's not just a painting. And so, I suppose that was when I was a little kid. And so I've been kind of a fan of the Joslin ever since.
Yeah, I love the Joslin too. Great Omaha institution. Before we go to questions, I did have one more thing I wanted to ask about. Gosh, now I'm like sitting here. I'm like, what was it again? You mentioned kind of the ethos that we've long had here with business leaders, people who have built businesses in Omaha and giving back. I mean, you go around town and whether it's buildings on UNO's campus, I mean, you see Logier, you see Scott, you see Hawks, you see these things. We know that there's generational shifts and there's, the Berkshire Hathaway kind of value investing era. But when it comes to like philanthropy, we punch above our weight here from like a dollar's perspective. But that ethos we've had here about giving back. What's your perspective on kind of the next generation? I hope we have some people here in the audience that are going to build huge businesses that are going to create a lot of wealth. What's kind of the responsibility and what's your view on kind of philanthropy and the right way to do it, and kind of what your view is on kind of Omaha and kind of the legacy of the next generation of business leaders here to be able to do lots of the things that I think you've been involved in and many other kind of business leaders in the past. I just think we have a great culture around that, and I'm curious about what you would say to kind of the next generation of people that are going to build tremendous businesses and generate a lot of wealth here in Nebraska.
Good question. Yeah, well, the way I think about philanthropy and its role in a city, I think great cities have great philanthropy, but they have great businesses, they have social engagement, and they have visionary leadership, which is more than just political leadership, but they have those things. And you kind of see a city that has all those things working, and it's awesome. It really works. I think that the idea of philanthropy is really about community building. It's about creating the spaces where the whole community can engage. There's all sorts of different kinds of philanthropy, so I probably made that's probably too general, but building a philanthropic community is part of building a great community. Taking care of people who can't do it themselves, exposing people to the arts, connecting people across different social, economic structures, and kind of building a shared vision for the life we have together. And so when I think about the ecosystem, which is really what we're talking about when we talk about the role of philanthropy, I think the Berkshire Hathaway is fabulous and maybe one of the best examples in the United States of how meaningfully it can impact a community. But when I think about all our people starting businesses now, engaging in startup activity, investing around startup activity, and that sort of thing, those are the philanthropists of tomorrow. This wheel can stop turning. If we look at the Berkshire Hathaway demographics, what you would find is that over time, a lot of those extended families, which are now generations away from the original investor in many cases, those people don't all live here anymore. And they're not all part of the community. Some of them are faithfully coming back to give, even if they live in California or what have you. But we've got to invent some more. And it doesn't have to be a Berkshire Hathaway to be a success. So, that's my take on philanthropy has a really important role. It should do things that government doesn't really have business doing. But you can also over-rely on it. Omaha has such strong philanthropy that it is an absolute outlier. There are almost no places like Omaha. And so sometimes the role of philanthropy creeps out into things that probably are really government functions and things like that. So, I try to think about philanthropy as living in a certain part of the ecosystem, but not the whole ecosystem, but it's really important. Was that even an answer?
Yes. Very good. Wanted to open it up, have some time here to open it up for questions. Does anybody have
Got a quick question, Paul.
Sure.
Earlier you mentioned in early Tenaska days, you built plants and you had $20 billion in plants at one point in time. You mentioned Pakistan, but where all were you internationally?
So we had offices in Mexico City, Rio de Janeiro, Delhi, India, and Islamabad. And I had an office in London as well, and New York. But I looked at countries like Germany, and everybody would love to build infrastructure in Germany or France or countries like that have hard currency. They're extremely creditworthy. EDF, Electricité de France, has a higher credit rating than all but like a dozen countries. That's the kind of customer you want. But the problem with markets like that is they were extremely well served by deeply entrenched competitors, very hard to penetrate. The problem with other places, like some of the places that we were working in, we ended up building one power plant in Latin America, and we ended up just with the Pakistan project. But we actually executed agreements, definitive agreements with state subsidiaries to build power plants in 2 power plants in Brazil and 3 power plants in India. And we signed 2 power plant agreements in Mexico, silver and other mining companies and such. And all of those, and really the problem is that the rule of law is just very different in different countries. And, so a lot of those got settled out. Now, we also did Canada, but I don't really consider that to be as international because it's such unified commercially with the United States. But as an example, when I went to dinner with Benazir Bhutto and she said, what's it going to take to get direct foreign investment? And there were CEOs from several other big American companies at this dinner, and so she was going around the table. There were like a half dozen of us, and there were some platitudes, and these were big companies. One of them was Enron, but there were some platitudes and stuff offered. And she got to me. I was the last one. I'm like, well, if I was you, I would want the lowest cost of capital. If you want low cost of capital, you're going to have to stand behind having this be a hard currency deal, either sterling, the euro, the dollar, what have you. So you're going to need the government to stand behind that, and that's how you're going to get the lowest debt cost, because power plants are all about your capital cost, and it's all about how much cost you've got in that. You know, we had a $700 million plan, you got to finance it, and then you've got to recover that cost. And I said, so it has to be financeable. You're going to have to give a government guarantee for exchange rate and availability. You're going to have to agree to external jurisdiction. You're going to have to agree to UK law or something like that. This is going to be a complex thing, but it is doable. And all of those things constituted legally the same level of legal rigor as a treaty, like has to be approved by their parliament. And she had an advisor of one of the big banks, and basically she reviewed this with them, and they said, yeah, that's actually right. So in Pakistan, where we did build a project, we had all of those things lined up, and it's, you know, it's an internationally very, very successful project. But it's complicated to work overseas, as you know, and it just was a lot of work for a couple projects. And so then I shut down the non-North American parts of the business after about a dozen years of that. Sure, Timothy?
Sure, Paul, quick question. So maybe sort of a two-part question.
Did you have a follow-up? No, okay.
When your investors, I guess both initially and subsequently, invested in Tenaska, did they invest in individual power plants, or did they invest in a slate of power plants, number one? And then number two, did they make money?
So, so the question was, what was the point of entry for the investors who joined us at Tenaska? Was it at the subsidiary level, like a power plant, or was it at the parent level? And because of our unwillingness to give them part of the parent, they were always invested at the subsidiary level, so directly into a power plant. What that did for us as a small employee-owned company was it gave us total control of our parent company, the mothership. We owned it. Nobody was going to tell us we had to sell it. We didn't have to go public. We weren't going to lose that company. And we took great care, actually, to design the way investment with us worked, to construct it so that if somebody didn't want to be our partner anymore, they could go. But they couldn't go by forcing us to sell the whole subsidiary or anything. They could go sell their part of the subsidiary. So a second part of the question, and I think that answered the first part, and that's always been a great example is we wanted to expand our gas marketing company, and we didn't have enough balance sheet. So we partnered with a small company you may have heard of, was called AIG. And what AIG did, because they were an enormous international financial company, was they basically put all the credit behind our gas marketing business. We then took our gas marketing business and tripled it in size, okay, within a few years. And then there was this thing called a financial crisis, and Tenaska's credit was better than AIG's after that. So we had negotiated a separation provision that if they couldn't supply the balance sheet, we could buy them out, because that was the key thing we were getting. And we ended up buying them out for a really good deal. And that worked out okay. But we always, because we were a small employee-owned business, we always took great care to position the company so that we were building together, but we were not relying on partners in a way that was dangerous for us. There's an asymmetry. When you're the small company and you deal with big companies, they can change their mind in a heartbeat and destroy your business if you design it wrong. So you always design so you could cut them apart. The second part of your question is, did everybody make money? To the best of my knowledge, every partner we ever had made money. And we had big partners. So Mitsubishi, for example, was one of our biggest Japanese partners. We had partners with major utilities in the United States, things like, and strategic investors. So they made money. I think that's
I think we probably have time for one more.
Sure.
What would you say are some strengths and weaknesses for a founder to build in Omaha instead of a place like Austin?
You say that again?
What would you say are some strengths for a founder to build in Omaha, strengths and weaknesses to build in Omaha versus a place like Austin?
So the question is, what are the strengths of starting something here versus, and weaknesses, strengths and weaknesses, starting here versus starting somewhere else that's famous for their startup community, like Austin. And I guess what I would say is the quality of life in Omaha is great, and that's touted, but I don't think that's the main thing. I think your ability to build a team in Omaha that will stay dedicated to you and not bounce company to company to company is really, really special here. And that stickiness that you get with high-quality employees is a differentiator. And so I think that's a big strength. I think that the startup community here is shallower, so you're less likely to find that perfect person or partner. So that's not as good as a place like Austin. And I think that the one thing that we've really got to work on here is having a stronger venture capital community. And so we've got Charlie Cuddy and people like Manny and John, us to a degree, trying to preach the gospel of investing here and trying to expand that base. So kind of a loose answer. I feel like I wandered around a little bit. I think your strength is your employees.
We're going to do one more. I passed them up earlier.
Quick follow-up on what you just said. What has been the problem of getting investors to do startup investment in Omaha?
So a lot of the wealth is a lot of wealth in Omaha is established through kind of Warren Buffett kind of philosophy. Kind of Ben Graham, wasn't that his name? The Intelligent Investor, written in like 1960 something. So this idea that you would have a startup company that is going to lose money year on year while its ARR is going up, and that you can convince somebody who has invested with Warren Buffett that this is a smart thing to put money into. That I think what needs to happen is there needs to be some great storytelling. We have some real successes here, and those companies have matched this kind of builder profile where you are investing and technically losing money. But a great founder once told me, I was looking at him losing money year after year after year as he built this company, and it got bigger and bigger and more successful. And I said, yeah, but I mean, if I extend this out forever, isn't that like the worst possible outcome? You always lose money. He said, you know what? If I stopped expanding the company, I would be cash flow positive immediately. And I looked at, I love financial statements, so I looked at his stuff that way, and I'm like, yeah, actually, that makes sense. We've got to be better at telling stories. We've got to be better at making our case for investment, and we need a hierarchy of people here telling that story. So it can't, I mean, it's a hard story for one person to tell. And I think that, I think we're getting better. And I think that, you know, Charlie's Move Fund has made a lot of progress lately. And, you know, my hope, something that I'm willing to get, you know, kind of my shoulder behind, is pushing this community to understand that if we build a great startup community, that this community will continue to be a high-performing community in philanthropy, in the kinds of jobs our kids want to have, in wealth building, in across the board. And I think if we can help people who are later in their life and sitting on a lot of money to understand that this is maybe better than sticking their name on some building, that it's more real, that it's more permanent, that it has more impact, then I think it matters, and I think we'll solve it.
Well, yeah, I can't think of a better note to end on. That was a great way to close it up. Thank you so much for the time. Thank you and Annette for all the time and resources and everything you put into the community here and giving us the ability to do things like this and kind of having it was funny, Charlie and I were actually just with somebody from the Rake School in Lincoln that was down here at Mastercraft. And it was because even from the perspective of a student in Lincoln, there's a critical mass of people here that he wanted to go run into an investor or two. He wanted to go run into another founder. And it just takes a lot to be able to put something like this together. So, you know, again, thank you so much for the support and the time, and this was excellent. So.